Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday, the 15th of August, and in this week we're going to discuss Australian earnings, economic data, and the Chinese economic woes. Now, just before I get into it, you do need to be aware that anything I say is general advice only, so it doesn't consider your personal financial circumstances, and you have to decide if it's appropriate for you. So we're in the middle of an Australian company earnings reporting season. We've seen CBA report earnings, probably a little better than expected, and they did jump on the day, although they haven't been able to continue higher after that. We saw a fantastic result from CSL. They were higher in today's session. There've been a couple of other standout reports. I think James Hardie had an exceptional result. Boral, another construction materials provider, did have a very good result as well. There have also been some negative reports. We saw SEEK down today. We saw AGL fall in this report. Overall, it's been a pretty middle-of-the-road earnings season, perhaps slightly better than expected, but again, similar to the US earnings season, not good enough to force the market higher from its current level. Overall, even though the banks did by and large rise on CBA's report, it wasn't enough to push them back to their previous highs. It wasn't enough to drive the market higher. Again, we also saw a fairly underwhelming report from Rio Tinto, or at least the market received it that way, and that wasn't good enough, obviously, to force the material stocks higher. So it's a bit of a middle-of-the-road earnings season. It has only just begun as well. There's still plenty of reports to come, a lot of companies reporting in the next few weeks, and so far, though there have been big movements, there hasn't been a consistent positive or negative season. It's been more sort of middle of the road. As with any reporting season, if you are considering a trade or investment at the current time, make sure you first check the company's earnings reporting calendar. And if there is a report, consider how it may affect your trade. Now, like I said, we have been seeing large movements both up and down this season. So if you are interested, you can do an each-way trade on many of these stocks, and there have been plenty of potential profits on a lot of these reports. The other thing that's of note at the moment is economic data. So we saw a fantastic July in global stock markets, and that was based on the fact that the markets were, or investors were, coming to the opinion that interest rates were at their peak and that a soft economic landing would be achieved, at least in the US. Now things aren't so certain. So we've seen a big spike in oil prices, which pushes up inflation worries. Oil is necessary for pretty much every good and service. It does have a direct or indirect effect on the price of all goods and services. And we've also seen weakness in perhaps the Chinese economy, perhaps other parts of Asia, that are also sort of concerning investors who might be worried about a harder landing. So we've got this sort of balancing act going on at the moment where we need to see Goldilocks economic data. We need to see consistent and relatively strong economic data, but not too strong that it sort of suggests inflation, but not too weak that it sort of suggests a hard landing or a recession. So today we saw Australian wages growth data. That was slightly lower than expected, but again, not quite enough to be recessionary. So Australian wages growth growing around 3.8% year on year, lower than I think about the 4 and a bit percent that was expected. Not great if you're a wage earner, but probably what the market wants to see from the perspective of reducing inflation. So there's plenty of important economic data coming up. Tonight we're going to see US retail sales. That's going to be a mega data report. The market will probably want to see slowing retail sales growth, but again, not too slow. So we want that Goldilocks data there. And then on Thursday, we've got Australian unemployment data. And again, we probably want to see a slight rise in unemployment, but not too much of a rise in unemployment. We want it just right. Otherwise, it might be seen as either inflationary or recessionary. Now, economic data in the West is sort of right where it needs to be at the moment. It's not looking too inflationary, it's not looking too recessionary, but in one part of the world it's not looking great, and that's in China. So today we saw really weak Chinese industrial production, huge miss on expectations. We saw weak Chinese retail sales. We even saw the Chinese Data Reporting Bureau basically say They're going to cut down on their reporting on youth unemployment because that's getting really bad. And so the Chinese economy is not looking too strong at the moment. That's not a great thing, but what we did see in response to this weak data is that Chinese authorities have cut certain interest rates in response to try and provide monetary stimulus to their economy. So it's actually quite the opposite situation in the West, where they're trying to, warm their economy up in China while the West is trying to cool their economies down. So inflation in China is not a problem. In fact, it's the opposite problem. They're trying to avoid deflation while the West is trying to reduce their own inflation. A bit of a different situation there, but if Chinese economic weakness does continue, there is a risk that it tips the scales in the West towards recessionary conditions. So China is a big story at the moment. We do want to keep a close eye on what's going on in the Chinese economy. It's a very, very important trading partner for Australia. A lot of the largest stocks on our market, including the very largest, which is BHP, do primarily deal with China. Iron ore, all the other base metals, coal, energy products. Not only that, but exporting travel, tourism, exporting education. These are all sort of issues or could be problem sectors if the Chinese economy continues to slow. An interesting data point to come out of China during today's round of data releases was that once Chinese university graduates finish their university degrees, more and more of them are heading back to their local towns, their local provinces, rather than staying in the big cities, staying where the universities are, staying in those sort of eastern hubs, and getting presumably professional employment. So we do want to keep a close eye on this. We're keeping a close eye on key materials prices, key energy prices, but if there is sort of a recessionary black swan or something on the horizon that could weaken Western economies, there's a chance it comes out of China or other parts of the Asian region. Alright guys, so let's have a quick look at the charts for the markets at the moment. We've got the US S&P 500 here, the most broad-based of the US major indices, and we can see that it's really been on a nice long uptrend since March. It actually has come back to the uptrend line. So it's not been a great start to August for the US market. It was riding high, but for August it's actually drifted back off a couple of percent lower back to the longer-term uptrend line. Now overnight they did show good strength in holding that trend line, holding the key support level, and they did bounce off that level. But for me, it wasn't convincing enough to suggest that they're just going to continue back to the 4600 resistance level. So the levels that I'll be watching are the 4525 level here. That was previously support in July and then maybe resistance in August. I'd want to see that break before I have a bit more confidence in the US market move. Otherwise, if they were to break below 4450 and break below this uptrend line, technically it would look like more selling would be in store. And then we'd be looking at maybe 4400 and 4300. But for now, we're just keeping a close eye on these key levels. For our own XJO, for our own market, we did break through that sort of roughly 7290 level yesterday. A bit of a severe sell-off, and that occurred with strong selling in Chinese markets and also in the Japanese market. But today we did bounce back up above that level, and that coincides with the US markets holding support overnight. Interesting to note, our market is showing some bearish signs with lower peaks and troughs. So we had the peaks at the start of August, end of July, and then we've recently just set a lower trough as well as the lower peak. So things not looking quite as positive in our own market, and that is to be expected. We've obviously got much closer presence with China. They're a much more important direct trading partner for us and for our biggest companies. And if their economy does continue to weaken, if iron ore prices fall, if other prices such as energy or other base metals continue to fall, that could be a bit of risk for our stock market. So I'd be watching this 72.90 level. If we're back below it, that's a sign of further selling. If we do push up from here, the resistance to watch is at roughly 73.60. Alright guys, that's it for this week. It looks like we're at a key decision level, both in Australia and in the US. We're looking for a sign that's going to break us either way. For the US, a key data point will be tonight's retail sales. that'll either see them continue higher or perhaps break those support levels. And for our own market, we're looking at the unemployment read on Thursday. As always, it's an absolute pleasure having you guys watch these videos. Hopefully you enjoy them. If you do, make sure you click the like button, click the subscribe button, and I'll see you in the next one. Bye for now.